Hello, everyone. Welcome to XM Live Trading session in the beginner's room. This session, guys, we're going to talk about candlesticks and chart patterns. We like to trade candlesticks and chart patterns because candlesticks and chart patterns are representing everything that is happening on the markets. Well, there are probably some um, arguments from technical traders that that's the best way for trading, and fundamental traders might disagree with that. We're going to touch all those points today, and we're going to talk about a couple of candlesticks and chart patterns, and also we will make live analysis and potential trading of the real markets. We will trade Forex, commodities, indices, whichever market you are interested in. I invite all of you to share all the questions in the chat room section. So I can answer all of your questions. If you are interested from crypto market, let me know which crypto instruments you are looking for. If you are interested from Forex currencies, let's go with Forex currencies, with Forex instruments. So I will make an analysis using technicals, chart patterns, and candlestick formations. We can also discuss the fundamentals. Why? Because it's very important week this week. We have a Federal Reserve interest rate decision. We have ECB rate decision. We have Japan rate decision. Before that, we have inflation numbers today. The most important news event today, it's the CPI, US inflation data, on which we probably going to have high volatility. The reason for that is might increase the emotions of the market participants due to very high number, low number, which could affect the Fed decision. And tomorrow, before the Federal Reserve decision, we have PPI numbers, which is also an inflation data, producers price index, which is kind of more a leading indicator for CPI, because if we have higher producers numbers, then potentially we're going to have also higher numbers on the basket, on the CPI. And it's also important because those last data before Fed decision might impact the federal the Fed decision tomorrow. Okay, guys? Well, if they are very important, I will say kind of, but just seeing as a single data, it is mostly bringing emotions to the market instead being kind of the most important news. The most important is going to be the Federal Reserve interest rate decision and their statement, Q&A. Those things going to give us light in the tunnel, what potentially they are preparing for the next months, if they're going to pause right now, if they're going to increase interest rates. And after they take the decision, what is going to be the next for them? Because if they increase interest rates, that's a pretty hawkish stuff as the market expects they pause. But after a rate hike, they might say that was the last one, and we are ready to even cut the rates this year. If they say it, all the hawkishness will go down the drain, and that dovish wave gonna eat the rate hike. Okay, it all depends not only the interest rate, but what they're gonna bring on the table. That's also, and vice versa. If they pause right now, but they say they are pretty ready to increase interest rates, and most probably they will do, they just want to see what is going to happen if they don't increase interest rates for the next data. And so that could also have different volatility. So we're going to talk about those patterns before that. How do I like to trade news? It's uh, preparing before and opening trades before the news, but for the data event, not for rate hike and FOMC meetings and Q&A. Why? Because that increases a lot of the volatility. We have some of the participants already saying hi. Innocent is here with us, says, what do you think of US 100? Nasdaq, good morning from Xavi. Good morning, I'm interested in currencies and metal, says Nando, amazing. And hello, good morning, Ioannis. We also have question from Crypto Meat and Gold, Andreas. Okay, okay, great. Let's start with US 100, quickly checking US 100 patterns and what's going on there. Absolutely bizarre trend. We have super strong bullish trend. What was the pattern here? Excluding everything, all the emotions. Morning, Sheikh and Ahmed. Great to see you. we have extremely strong bullish trend. This was the printing money bullish trend, which is COVID stimulus. And then tapering has started here. This was the last peak with great shooting star, bearish engulfing, market collapsed. Down here, we had bullish rejection, bullish engulfing. This was the bottoming signal or accumulation phase, which on the lower time frame is extremely nice, perfect double bottom trend reversal. You see this? Double bottom started with bullish engulfing, retested with amazing double pin bar. This was the neckline of this double pin bar or double bottom, which actually turned to be a W shape, which is a slight difference. Double bottom and W shape differences is that the double bottom, it's when the price is at the bottom, and W shape is when double bottom already confirms the first bullish wave up. And that creates a double shape. This was the flag pattern, retest the previous level of resistance as new support, and bulls engulf the bears exactly at that new level of support. Market skyrocketed by breaking the previous structure high very well and consolidated for some time, or let's call it reaccumulation or build up after the breakout. With nice breakout happened and price never stopped. Why that price went up? Because there was some hype for AIs, and since those companies included in Nasdaq are pretty well involved with AIs, they are bringing chips, they are using it, and it's kind of companies that are benefiting for AIs, and AI might benefit from them. This is kind of the positive money flow that comes to those companies, which created that stronger move up. On the other hand, we have high liquidity in the financial markets. What that means? It means that the big boys are the central bank and the government. Central bank right now was shrinking the money, but they stopped shrinking money last week. So we have neutral points, shrinking money, shrinking liquidity. So if they are not getting more liquidity from the financial markets for last week, it seems like the markets reacting positively. Plus, Treasury Department is also shrinking down their cash account, meaning they are still putting money in the markets and not getting the money from financial markets. That's positive for the stocks. That's positive for everything until vice versa is true. At this point, we don't have that data. So that's extremely strong on the weekly chart. We've discussed that doji pattern. In case the price closes like a bearish reversal engulfing, then I'll be interested to trade a retracement if the week closes bearish engulfing. Well, we don't have it, so cannot take a long-term decision for short, even though we tried a couple of small trades with tight stop losses just to test the waters. And what basically happened is price directly broke out the resistance. So strong, guys. Look at this significant breakout from yesterday. Price never looked for a downside. I tried some small. This is my small stop. Oh, it's a break even. This is a small profit, nice profit, break even. Basically, we don't have losses here, only profits or break even, which is not great because the profits are closed in very small profit because of the trailing stop. The idea was trade counter trend short term to catch the major retracement. Or if the price was in a profit, like 90 points, I didn't close the position and I just moved stop below the enter to secure my trade, and price kicked me out with break even. As you can see, open and close are more or less the same. So the price broke out, which is the buy signal, but can I buy here? I don't like to be still buyer, even though that might be my wrong decision if I want to capitalize on the trends. Let's think about how the trend started. We can see nice double bottom by having bottom fishing as per Andrew's way to explain the false breakout. This is absolutely amazing bottom fishing example. This is the break above the structure high, consolidation trend. We had this retracement, flag pattern type of a retracement. There we go. This is a great pattern. The pattern here starting with double bottom. That's the reversal. Look at this double bottom. Okay. And down at the bottom, we have big high wave with nice bullish rejection as bottom fishing, bullish counter attack, trend continued. This was the retest. Okay. And here we had 3 insight extended, which is trend continuational candlestick formation. Market went up. This was a little pullback, always choppy with nice hammer formation or pin bar down at the bottom. Send it up. This pulse kind of gave us a hope that market will make a retracement, so we will be able to buy on the bigger retracement down at the bottom. But what happened is bulls managed to take over the bears. And the current pattern is that tight consolidation was broken with significant bullish Marabozo yesterday. Absolutely strong close, which means that this is very bullish market. How we can take advantage if there are no significant pullbacks, guys? Do you remember? By using moving average, area of support and resistance, which are dynamic support and resistance levels. So I'm using red color for 21 moving average, or 20 moving average is absolutely the same, or 10 moving average for 2 weeks average price. And basically that presented nice bullish price action exactly at the value area. So that was a good pattern. Every time the price is retesting its averages and using them as a support, then with the strong bullish counter attack, that's a good buy signal. Basically, that was the range bottoming signal. Then nice breakout, pullback, breakout, pullback, breakout, pullback, as we can see until now. We also have pullback, retest, market skyrocketed. And every time market makes a pullback, we see that moving average is widening. If the moving average is widening, then that means that the trend is getting strong. The momentum is getting strong. How we can confirm that? We can open some momentum indicators, or we can just look at the moving averages. That's a great pattern. And the candlestick formation says significant bullish breakout. And how do I trade that? Going lower time frame as 4-hour chart. I'm waiting the price to make a pullback down to the average prices and use it as a dynamic level of support, which is pretty much aligned with the previous level of resistance, which may act as support. Simple and easy. If the price makes that pullback, I will be interested to watch for buy opportunities in order to take a long trade on the pullback at the top of the impulse. Hello, Sam. Hello, John. Hello, Samuel. Non Zwakazi. Great to see you guys. So this is the last impulsive move, bullish impulsive move, starting from the bottom, moving all the way up. If this is the top of the trend, we don't know that. We need to have some pattern in order to say that trend is preparing for short reversal. This level that I'm looking to buy, it's actually 38.2 Fibonacci sweet point, which is aligned with the previous level of resistance exactly, and which is pretty much aligned with my moving averages here on 4-hour chart. Absolutely great move from the, it's a key level of support, let's say. We have also Knox Presley. Hello, nice to see you from our YouTube followers. Great to see you guys. Our YouTube followers also, Crypto Meet, Gold. It's great to see you guys. Looking forward to your questions and instruments that you are looking for trading. Maybe you are preparing for Fed tomorrow or trading inflation data today. Let me know. John is asking for euro dollar. What's your take? Amazing question. I was a bullish trader there. We're going to touch it in a second. Just let's complete with that US 100. So if I have to trade that right now, my decision is for innocent is to wait for the price makes a pullback and watch for buy price action down at this level of really strong support. In case that price never respect that support as one, because it was a resistance and never worked as support, maybe it will. But if it doesn't, market directly gets back in the structure. So we consider this move up and getting back as a false breakout. I will be interested to sell on the rally and retest the same area as resistance once more. So I'm going to look to go for short. So I'm trying to stay neutral. The first scenario is buy on the pullback. The second scenario is sell on the false breakout, meaning that the price gets back in the structure and sell on the little pullback. So considering this as a false breakout. What about right now? If you have to take decision right now, open a trade. If you ask me what you would do if the price, if I force you to trade right now, well, then I have to go for lower time frame and see what the price is giving me as an information. At this point, there is little exhausted move like spinning top at the top, 3 drive spot on a little bit. Let's move like this, 38.2. Yeah, pretty much potential pullback I see also on the lower time frame. Nice pin bar on the 30-minute chart. False breakout, dark cloud cover. Yeah, if I have to trade it, I'll most probably go for sell because risk to reward is better for a downside. I will have like 26 to 30 points of a stop loss and potential target is extremely big. Even if I go for previous structure low, which is this one, I'm going to make 1R. If I go slightly here to these highs, I'm going to make twice bigger profit than the risk. If I go for this 3 times bigger profit than the risk, and the major target, which I actually discussed on the bigger time frame, it makes 8 to 10 times bigger profit than the risk. I'm going to open very small trade which is going to be a few dollars only, guys, for example. So I'm risking, let's say, $2, $3, just for example. And I'm widening my target here to 10 times bigger profit than the risk. This is going to be my trade if I have to open trade right now. But if I can wait, if I'm not forced to trade, because why I would be forced to trade if you are having a trade, so I give you example what I would do.